Very good morning, guys. Yesterday, the gap up did exactly half of what it promised. It held. The Nifty opened higher near 24,107, never once went back to test 24,000, and closed green at 24,103. The floor was never in question, but look at the other half. It ran up to 24,168, got within 30 points of 24,200, and then it just stopped, faded into the closed. The resistance the sellers built on Friday held on it very first test. So here we are on Tuesday. Today is weekly expiry, and the market has boxed itself into the tightest room of the week and a floor. uh, a 24,000 floor below, a 24,200 resistance above, and a spot sitting almost dead in the middle. This morning, Gift Nifty is flat, pointing to an open of 24,090, basically where we closed. No gap to trade, no momentum to chase, just just resistance and a clock. This is the Tanmay. You are listening to episode 66. I am Tanmay Kurtagoti. Let's go. Let me set the board, guys. The Nifty closed Monday at 24,109, up 90 points, one third of a percent, and it did inside a 95-point range all session. Opening 24,107, high 24,168, low 24,073. The Sensex added 291 points to the closed at 77,094, and the sector story flipped from Friday is in the best possible way. The technology stocks that got hammered on the Accenture scare bounced straight back. Tech M up 1.7%, Infosys 1.3% up. The IT pocket was green. Pharma led, Sun Pharma was up 1.4%. Reliance recovered 1.3% up after it sell the news on Friday. The banks were firm. The banking index up almost half a percent. What dragged instead was the consumption corner. Asian Paints down over 2%, Titan down 1.2%, ITC and Hind Unilever soft. So leadership rotated, IT and financials carried, consumption sat it out, a healthy boring range bound day, exactly the coil the numbers drew on Friday. Under the surface, one thing to flag, guys. Yesterday, the FI desk went back to selling our cash market, a net 636 crore on combined tally, and it was the domestic funds buying just over 1000 crore that held the tape up. Remember, Friday the rules were reversed. FIs bought, domestic guys sold. Two sessions, two opposite prints. That flip flop is its own signal. Nobody here has a conviction. Now the positioning. The professionals first, then the foreigners, then the retail crowd. Because today the order tells a small story. The pros or the professional desk just flipped. In index futures, the pros went from a small net short on Friday to a small net log on Monday, and 1200 contracts plus they are carrying long calls. Small, but it is the first desk to lean up. The FI is still heavily net short the index, about 2.23 lakh contracts. But here is the change, they actually covered a little, about 3600 contracts on Monday, while sitting on a big book of long puts and short calls. So the FIs are still hedged bearish on the index, just slightly less so. And the retail crowd is net long about 1.55 lakh futures and has sold a huge pile of puts, the most bullish lean of the three. Pros nudging long, FIs trimming shorts, crowd already long. A faint upward tilt, nothing more that I can see. Now the map, because on expiry day, the map is the whole game. The open interest has stacked into two giant walls, and they are almost mirror images. Below us, at 24,000, sits the single biggest line on the board. Just over 13.1 lakh put contracts have been sold at that strike. That is the floor or the support, and it is the heaviest floor of the week. Above us, at 24,200, sits an almost identical call resistance, about 13.3 lakh contracts. That is the ceiling and the heaviest of the week. In between our 24,100 level, calls and puts are evenly matched. about 11 lakh each, perfectly balanced. So the picture it cleanly: a 13 lakh floor at 24,000, a 13 lakh ceiling at 24,200, and a spot opening right in the middle near 2490. 200 points of room walked on both sides on one day that those walls bite the hardest. And there is a number that sits right on the top of all this: the max pain level. If you take every option on the board and ask where the price would have settled to inflict the most loss on option buyers, the answer today is 24,100. Exactly where we are. The chain is not predicting 24,100, it is pulling towards 24,100 because that is where the people who sold these options keep the most premium. The put call ratio is 0.87, slightly call heavy, the weight is overhead. There is also a switch inside the room around 24,150. The character of the market changes. About 24,150, keep a watch, guys. Remember this level. The desks that sold these options are forced to trade in a way that dampens moves and pins it. It drifts quietly towards that 24,200 ceiling. Below 24,100, the same forces flip and start amplifying moves, pulling the tape towards that 24,000 support. We open at 2490, just below the gamma flip level. That is the line to watch all morning. And the size of the day, exactly because the market quotes it. The ATM straddle is about just 129 points. That is the market's own one standard deviation move for today, plus or minus 129 points from 24,103, a band roughly 23,975 on the bottom end to 24,230 on the upside. Given it is the usual buffer and you get about 23,940 on the lowest end to 24,265 on the upper end. Remember this level: 23,940 on the bottom end, 24,265 on the upper end. The expected move for the whole day barely reaches the 24,200 ceiling on the top and the 24,000 floor on the bottom. The walls and the math agree. This is built to be the range. India VIX is near 13. The implied volatility around 10% is extremely low. Here is the thing about expiry day that traps people, and it is worth 30 seconds. That premium is cheap. Cheap premium is tempting to buy, but on expiry day, the options you buy this morning has a deadline of 3:30 this afternoon. Every hour, every second, time decay eats it. And on the last day, the decay is brutal. You can be right on direction, buy a call, watch the index tick up, and still lose money because the premium bleed to zero faster than the spot could climb up. The walls tell you where the markets want to settle. The clock tells you it has to get there today, or the option buyer goes home with nothing. On expiry time, time is the trade and not the direction. If you are buying naked options today, you are racing a clock that does not stop and wouldn't recommend you to buy today. What about the world outside? No help this morning and no real threat either. Americans tech heavy index slipped about one third percent overnight. Asia is mixed to soft. Japan and Hong Kong are both red. So the hot Asia tailwind that capped us on Monday morning is gone, and that is why Gift Nifty is trading flat, not higher. On the other side, crude is still cheap. Brent under $78, a quiet cushion under this market, and the rupee softened a touch to 94.70. Nothing out of these forces a breakout. It argues for the same thing: the walls or the resistance for a range. So the plan on expiry, it is discipline over ambition, guys. We open flat towards that 2490 mark, right at 24,100 pivot, which is also the max pain. Base case, a pin, a coil between 24,000 to 24,200, settling near that 24,100 mark. Trade the edges, not the middle. Reclaim and hold 24,150 and let it drift towards that 24,200 mark, but respect that resistance. It would take real FII short covering to close about 24,200, and there is no sign this morning that that is happening today. Lose 24,100 and stay under and slide towards that 24,000 is the trade, and 24,000 is where you look to buy the dip because the floor has enormous support. Only a clean close above 20 below 24,000, and it would have to be a clean opens 23,950, then 23,900. Do not buy naked options and pray for it. Do not chase the first tick, guys. Today is not going to be a hugely option buying day. One caution: a pin is the base case, not a promise. The whole setup rests on these two walls holding and a spot opening between them. Breaking of any of these sides, a heavy directional move can surprise the headline, and the calm will flip very fast because on expiry day the move feeds on itself. Keep your size small, guys. The reward on the pinned expiry is small by design, so the risk has to be smaller. So Tuesday in one breath, Monday gap up held the 24,000 floor but stalled cold at 24,200 resistance and faded. The coil we called. Today is the weekly expiry, the tightest room of the week. A 13 lakh floor at 24,000, under a 13 lakh ceiling at 24,200, max pain at 24,100, and open flat in the middle range of 24,90. The expected move is just 129 points. The walls and the math both say the range. Pros nudge long. Foreigners are still head short with no conviction, and today's clock does the rest. Hold 24,150, that is the flip level, and it pins upwards towards that 24,200. Lose that 24,150 and it drifts to 24,000 floor where you would buy the dip. Call it a boxed in expiry, two walls and a clock, one lasting. Episode 65 graded 5 out of 6, guys. Every level and the band landed. Only the call that IT would keep dragging missed because IT bounced back. Full scorecard is available on rupeecase.com. Trade the level, not the opinion. This is the Tanmay Edge. If this helped you read the tape more clearly, share it with one person who trades it and needs it right now. Hit subscribe on so you never miss a morning podcast notification. Stream the full episode free and first on rupeecase.com and also on Apple Podcasts, Spotify, Amazon Music, and every other trading platform. Every trading day at 8:30 in the morning, and leave me a rating, guys. Read every single one of them. I'm waiting for your reviews. Have a happy expiry, guys. See you once again tomorrow.